studios in Mumbai.
Good morning, hello and welcome to a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant, with me my colleagues Sonia and Nigel, and I have to start by saying thank God it's Friday. Morning, guys.
You know, you sound extra chirpy on Fridays. I'm sure Nigel will also agree with me on that. I mean, there's just
some enthu, right?
Fresh energy in your voice, but rightly so.
Rightly so, Nigel?
Let's hope it rubs off some bit onto the markets because we're starting off on a dull note, I think so.
Slightly dull note, yeah.
I know the start is exciting. What about the end? How does Friday end?
Our Friday's a long one, huh? By the way, with the last show at 5.
All right, let's get the ball rolling. Let's tell you what's lined up in terms of the cues, right? What are we waking up to in terms of the US market layout? Because that has once again become important. I mean, we like it, we don't like it. I think markets will pay attention to what's happening. So that's the change on your screen. The Nasdaq was down about 1.7, 1.8%. The S&P 500 was down about 1.4 odd percent. The S&P, by the way, is closed a bit under the 4100 level. It's a key support for the S&P. It's a bit of a battleground area, right, which many have been watching closely. It's a daily close, but if we close once again today, it's a week. If it gets to a weekly close under 4100, then I think people will start to project perhaps a little more downside here. You know, the US session, the US market, by the way, has also was at least till last night exhibiting signs of what we saw all of 2022, dip buying. I mean, just consider this. Excluding yesterday, in the past 19 sessions in the US, 16 out of the 19 sessions, the US market closed higher than where it opened, right? I mean, that is quite incredible. But yesterday, it kind of broke that pattern, and the market in the last hour swooned lower, and we ended sharply with cuts. So what happened in the US session? We had data which was once again strong. And now this is becoming a string of stronger than expected data. It started, of course, with that jobs data 2 weeks ago. We had the CPI numbers which came through, and last night we have the producer price index numbers, which also beat expectations, which then feeds into the CPI. We also had jobless claims which slid. I mean, they are at lows. And these are two things which the Fed watches very, very closely. We were saying this yesterday morning at the same time as well, that although we woke up yesterday to stronger cues, the debate is on. Skeptics will argue that maybe the market in the US has got blinkers on with the fact that data is coming in so hot, and the Fed will have to do more to curtail all of this. And I think, sometimes the reactions are a day delayed, 2 days delayed, but they surely do come. So we had Fed speakers once again. We had two of them. One is FOMC water, the other is not. And both sounded hawkish. They actually said explicitly, we'll play out sound bites in a bit. They said that in February, when they hiked 25 basis points, the meeting which has gone by, they said we should have done 50. So, this is what we are talking about. Okay, let's just come to the market here in India. For both the Nifty and the Bank Nifty, yesterday was disappointing because we had a strong start. We had a very good start actually. Good first half. The market, of course, was looking a little tentative, but then it completely lost all momentum by close. I mean, the Nifty ended 20 points higher. The Bank Nifty, of course, had it even worse. For the Nifty, a close above the 18,120 mark still remains elusive. The intraday high was, I think, 18,134. So we crossed this level on an intraday basis. That's where, a moving average and retracement level converges. So a close above that, I think, is still eyed. It's still elusive, as I said. Supports come in at the 40-day and the 20-day moving averages. The two levels are 17,952 and then 17,855, the 40 exponential and the 20-day simple moving average. These are levels to watch on the downside. Unlike the Nifty, Bank Nifty has still not been able to even cross the 40-day exponential. For that, I mean, the level becomes 41,846. It's not very far away. I mean, these are very near-term levels, important if you're trading day-to-day. But 41,846 is what you need to cross above to talk about further upsides. And for the Bank Nifty, supports come in at 41,158. So these are levels to watch out for. The cues from overnight are not all that positive, and I'm assuming the SGX is indicating a slightly weakish kind of start. There you go. It's down 100 points. 17,965 is where we are at. It'll be basically around the the 40-day exponential or the 20-day will open. If we get this kind of open by 9:15, you'll be around those support levels straight off the bat. Guys, hi.
It's interesting, right? I mean, everyone's expecting a rate hike from the Fed in the March policy, and I just almost had this moment where I thought I'll ask ChatGPT what the rate hikes are going to be. I mean, that's the way this whole ChatGPT thing has sort of blown up, right? Every question you have, you sort of just go straight there. I don't know how it's going to play out eventually, but I mean,
although ChatGPT only has information fed into it till I think 2021, if I'm not mistaken. So it will not have to. So it'll give you an answer saying I'm so and so, so and so. I only have data till before.
It can't do crystal ball gazing is what you're saying.
Not yet.
ChatGPT, what's my salary hike going to be next year?
Oh,
that's a big one. All right, but yeah, I mean, for the SGX Nifty, of course, it's under a lot of pressure this morning, and that's the big question, right? The Fed rate hike is coming, and it's coming in March, perhaps. That's what the US was, sort of documenting as well. It was a weak handover. The Dow was down over 430 points, and as we were mentioning, the St. Louis Fed President James Bullard said that he will not rule out a 50 basis points rate hike in the March meeting as well. So the fight against inflation is not over just yet, and that's what most global markets are penciling in. But for our own markets, we're at a 1-month high. The Nifty has been gaining for 3 straight days. There's been 5 days of buying from the FIIs. Yesterday, there was a large buy figure both on FIIs and DIs, but this includes that Indigo block deal worth about 2,300 crores. So, do keep that in mind. For our own markets, this level of around 18,000 has been a bit of a hurdle for a while. Let's see if we can break above it. For starters, at least, the starters on the downside. But the dips have been getting bought for the last many days. So let's see if that shapes up. For now, this 18,000, 18,100 level is a bit of a hurdle on the upside for the market.
Well, that's right, Sonia. And yesterday we came off the high point of the day, and it could be weekly expiry led as well. We went all the way to around 18,130, and from there we did see some profit taking. So yesterday you can attribute it to weekly expiry that played out. And today is on the back of global cues that we like to start off on the back foot. Now, the Nifty Bank or Reliance Industries, both of them will have to bat for the bulls if in fact we need to see a recovery. Today, the IT index that has been outperforming for the last 3 sessions, in line with what the Nasdaq has been doing, it could be a little bit off color today because the Nasdaq ended with a cut of around 1.8%. The first hour lows, crucial to track. If we can hold on to that vicinity of around 17,930 to around 17,950, the bulls will feel we have some bit of a hope, but crossing yesterday's high is going to be very crucial. The FIs in the FNO market, they got back to their shorting way. So they added close to around 4,500 short contracts. So the short positioning now is at around 74% odd. But on the option side, the 18,100 call, well, that saw a fair bit of writing in trade yesterday. But on the downside, the 18,100 put and the 18,000 put, both of them added close to around 45 lakh shares odd, telling you that there was writing at those levels. So today, given that we're going to start off on the back foot, let's see whether we see some unwinding at those levels. Keep an eye out on the 18,000 put in particular. If you start seeing some unwinding out there, that means that the bulls are throwing in the towel. Let's hope that doesn't happen. What are the levels you're looking at? Yesterday's high, that's the key resistance level in the near term. But on a closing basis, you like to end closer to around that 17,950. And I say that because the 18,000 put, that's indicating the 17,950 is very important. And the 100 DMA as well is indicating that. The Nifty Bank, well, the 41,200 has been a support for the last few days. Let's see whether or not that can hold out. If we could hold that level today, at least the bulls will feel that they have a fighting chance. SGX Nifty is suggesting a gap down. Track the first hour lows and don't be very, very brave is my call today.
Okay, all right. Well, before we start the show, let's just tell you the SGX Nifty actually is at the low point of trade. But let me tell you what's lined up in the first half hour of the show today. We'll get you updates from the markets across the globe, and Abhilash Narayan of Standard Chartered Bank will be joining in to discuss the global trade setup. Later, our research team will bring you CNBC TV 18's list of top 10 stocks for the day. At around 8:30, we'll do a fundamental stock analysis with Siddharth Khemka of Motilal Oswal Financial Services. But first up on the equities front, we have a comment coming in from Lawrence Belanco of CLSA. He says they continue to focus on further selective gains in risk assets into the end of Q1. This growing selectivity continues to provide a number of tactical trading opportunities. In the US, the key action remains in the tech space with the most interesting chart featuring the relative breakdown in mega cap tech versus unprofitable tech. On the currency front, Lawrence says the Indian rupee looks set for further weakness with the $86 to $87 upside target, and the dollar yen is set for a rebound back to 137 to 139 area.
Okay, well, let's get you some money market views now. This is Bhaskar Panda of HDFC Bank, who says the dollar index climbed above the recent range as U.S. producer price index data came in higher than expected. The U.S. yields also remained elevated. Oil remained range-bound, while Asian currencies remain a little pressured. In India, data showed that trade deficit had narrowed a bit, but the dollar continues to strengthen. Hence, he expects the dollar INR pair to trade in a range between 82.65 to 82.85 to a dollar for the day.
All right, and on the bonds, Bhaskar Panda of HDFC Bank says the Indian bond yields remain range-bound despite higher CPI. He expects the 10-year benchmark to trade in a range between 7.3 to 7.35%.
All right, we have a lot of stock-specific action to track for you, and we get to that in just a bit in our special Top 10 segment. We're looking at Bharti Airtel, Reliance, Minda Corp, Precall, Schaeffler, Vedanta, Ultratech Cement, Railtel, and NLC India. Their stocks on the back of positive news flow. Given the kind of start we have, let's see whether or not they all open up in the green. On the flip side, you have Vodafone Idea that could potentially open up in the red.
Okay, all right. Well, let's get you some reactions to the inflation